Hello, this is Capital speaking, and in today's video we're gonna discuss why I think that the market is in its final stage of the growth, and we will see the pivot in the market direction pretty soon. Let's dive straight in. The main indicator of the recent days that I came across is actually interest rate, and as you know, or you find out right now, that interest rate was paused, was no longer increased. I assume you already know what interest rate is for, but for clarity's sake, let's reiterate. Higher the interest rate, more expensive the money. Lower the interest rate, cheaper the money. I also want you to know that the interest rate increases in the past 2 to 3 years were the most drastic, the most rapid in the history of the US. So let's actually look at the interest rate chart. We are specifically interested in the market chart for last 23 or so years. As you can see, we have 3 stretches of interest rate increasing. Well, 4 if you count the last one. And 3 stretches of the interest rate being paused or halted. And as we discussed in the intro to this video, interest rate was halted yet again for the first time in the last 23-24 years or so. It's impossible to avoid seeing the rapid decrease in the interest rate after the pause. And what are those grayish lines behind the drops of the interest rate? Well, those are economic crises. In 2001, we have dot-com bust. In 2008, well, you guess it. In 2020, well, things that we're not so welcome to pronounce on YouTube. Let's just say the thing that caused all the global supply chains to stop. Yet again, we pause before the crisis. And the pause before the crisis may take half a year or a year. That's due to the fact that for interest rates to take an effect, they have to be active for at least half a year. That's what's considered to be an interest rate delay. So from that point on, we will see a crash depending on how withstanding US economy is. Some people may object that Jerome Powell actually said that there are likely to be 2 more increases. But don't you worry. They say it all the time. Every time the interest rate was paused, there were promises that, oh no, we're gonna hold the market. But apparently holding the interest rate at the levels that they are set to for half a year or a year is considered to be sufficient. And even if we're gonna see 2 more interest rate increases, that's only going to make the pivot more rapid. And the funny fact is, if you zoom out to actually see more years of the interest rate history, we're gonna see that this kind of cycle only started since the early 2000s. So prepare to fasten your seatbelts. In the following year, we're gonna see a market crash, in my opinion. If you like this video, please consider subscribing and have a good one.